everybody, and welcome. My name is Kenny. I'm the founder of STR Insights. Today, we're going to be talking about STR investing during a recession. I actually had a lot of people reach out to me in the past couple weeks. I've had a lot of conversations, and everyone's like, "Hey, Kenny, what is your opinion? Where do you see this thing going? How can I invest in short-term rentals today and they still be a good deal?" Because let's face it, the interest rates have risen. Housing prices, they're going down slightly, but we're still not seeing those amazing deals yet. So there's a lot of beginners out there and advanced investors who are trying to find opportunities right now, but it's very difficult. So they're having to do some creative financing and looking for the right markets to invest in, because what we're seeing in the data is that certain markets are actually doing decently well considering the circumstances, and other ones are doing less well. And so the big question on everybody's mind is, all right, that's good to know, but what are those markets? And so what I decided to do is bring in experts, market experts across the country. And I'm going to do a series each week. And what the point of this is to interview them. I hope it doesn't come off as me grilling them, because I want to bring the data side. I want to bring the analytical side. And what I want them to do is kind of back that up from what they're seeing in their markets. And I'll challenge them. I'll say, hey, look, this is what we're seeing today in your markets for housing prices and revenue. As an investor looking in, that doesn't make sense to me, or that looks attractive. Why is that attractive? Do you see that continuing to grow in your particular market? And so it's really important for us as investors to both look at the data and the analytical side, and then speak to experts in those markets to understand what else is going on in the market as well, besides just the data. Just to kind of emphasize what I'm seeing in the background, I was looking at Hot Springs, Arkansas, for example, and an investor friend of me asked me, hey, I'm looking to buy this property. We've been under contract for several months now because we've got to work out some issues with that property. The owner, the seller of that property is trying to do. And I'm finding that, obviously the rates have gone up. Has the revenue, the average revenue for that market gone down in the last 12 months, that trailing 12, since I analyzed that property in July? And I was like, that's a great question, So I looked into the research and did the research for them. And I actually found that the average revenue for the trailing 12 from today back to, I think it's like October of last year, had risen compared to the trailing 12 from July of this year backwards. It had risen by about 2%. So it was interesting. And it was in Hot Springs, Arkansas. Now, that wasn't every bedroom count. That was a very specific one we were looking at. However, I started to dive into other markets and to see, what those numbers were looking like, if this is across the board or if this is just an anomaly. And it turns out it varies market to market. So I'm going to bring in Tyler Coon, and I'm going to introduce him in a second. But what I'm trying to do with the series is I've isolated certain markets that are doing well, given the economical circumstances going on. And I want to dive in and ask these realtors or these professionals in these spaces, why are they doing well? What's your perspective? Because a lot of these places I've personally never been to, but the data speaks for itself. So without further ado, I've got Tyler Coon. He's our first professional for the day. Or for this week, I should say. So Tyler is the founder of Savvy Realty. He works in all of North Carolina. He is short-term rental realtor focused. He's helped probably some of you listening find a lot of deals in that area, but he's also networking and reaching out and expanding into different markets. And the guy knows a lot, especially about the Southeast. And I'm really excited for him to bring him in. He also manages, just so you guys know, he doesn't just sell properties. He owns and he manages over 50 properties. So he understands and he has a pulse on the market, especially North Carolina. So without further ado, I'm going to bring him in, and then I'm going to grill him a little bit on some of the data and see what he has to say. So let's have him come in here. I'm gonna flip us here. So there we go. All right. So I have the logo above my head here. How you doing, Tyler?
Good. Hello, Facebook world. Now I'm nervous because I feel like you put me on the spot. You're like, this is going to be an interview. There's going to be a lot of people watching, and for the last 3 minutes, you talk about how much you're going to grill people. So
No. I say grill, but I do know that you know your stuff, and there wouldn't be anything that you can't handle. So, but I do have some tougher questions because we have seen, Tyler, specifically. We'll go into it in a second, but because I want to start high level and then work our way down to market specifics. But there are certain markets, even in North Carolina, that aren't performing as well as they used to, and so what's going on? Is it because of the economy? Is it because of that market, or really what's going on? So, I guess let's start high level first, and then we'll hit the particular markets and look at some data. But okay, so there's a lot of people who are like, we're in a recession right now, or we'll be in a recession soon after the holiday season. It kind of varies, but obviously there's some sort of economical downturn, and it's impacting the short-term rental market. We've seen rates through the roof, housing prices slightly ticking down, but not much. So from your perspective, Tyler, I mean, is it even worth investing in short-term rentals today?
Yeah, so I definitely think so. And I'll give you one statistic that I saw, and you can let me know. You're the data guy, right? So I have to rely on what you've seen too. But I do some research, and I'm a data guy too, maybe not to the level that you're at, but from what I was looking at least in Western North Carolina, in my market, in the mountains here, October was our biggest month for short-term rentals ever of all time. Not only just in nights booked, but in revenue, in occupancy, and the number of places booked, right? And so from what I understand is that the short-term rental market inventory, right, the number of places that you can rent countrywide has gone up 25% year over year. And that's crazy. And so this is why I think that you have people out there saying my occupancy's down. People aren't traveling. Well, I don't think so much that it's that people aren't traveling, because that's not showing up in the overall revenue. Overall revenue is up. I think Airbnb maybe last week or something did their quarter three. They made the most revenue ever. How do they make the most revenue ever if they haven't? It's not like they're increasing fees, so they must be increasing revenues, right? That's the only logical conclusion. So I think, for me, what does that mean? If inventory is growing and outpacing travel demand is still growing, then what that means is you have to go find a market where either your inventory is not outpacing your travel demand, right? So maybe inventory's grown at 5% year over year, 10%, but travel demand has grown 15 or 20%, right? So your travel demand is outpacing your new rental inventory, or even potentially go find a market where rental inventory's gone backwards. And so it was really funny the day that report came out. I said, this is really interesting. And it was my hypothesis that was the case, because I've got properties. We're staying more booked, right? 2022 will be our best year ever. And so I was underwriting a deal for somebody in Sugar Mountain, where there's a ski resort up in the high country that day. And so I went and I looked at rental inventory trailing 12 months. It had actually dropped by 10% and revenue was up by 20%. So now you have travel demand outpacing significantly new rental inventory, which in fact was actually going down. It went from 550 listings to 500 year over year. So if you can tap into a market like that, to me, that's a winner. I think the second thing on that, and I know I'm going on forever here, is that for my clients here in Western North Carolina, we're not looking for bare bones cabins in the woods. We're looking at maybe 1% of new listings. We're going through 100 new listings on the market and saying, maybe this one is worth it, right? Yeah. A small segment, macro segment. And why is that? Why is it not every house? Because we want to be in the top 90 percentile of properties. Because if we're in the top 90th percentile today, then over time, as things change and new rental inventory comes on, we may fall a little bit lower than that, but at least we're not in the 60s. We're not in the 50s. We're not buying a cabin in the woods in Blue Ridge, Georgia that's like everything else, right? We're looking for something special.
That's really interesting. Tyler, have you heard the phrase the STR wealth gap before?
I haven't. No. Are you coining it? Is
I'm
it
coining
new
it.
thing?
That's why. No. So what I have noticed, you touched on it and you nailed it. And what I'm actually seeing in the data is that there is this dividing wealth gap or revenue gap. We'll call it a revenue gap, a wealth gap, revenue gap. We'll assume it's the same, but this revenue gap between the 90th percentile of properties in terms of performance and the 50th or the average, meaning that the 90th is actually performing better this year than they were last year. This is their best year so far. And the properties that fall below 75th percentile, maybe even a little higher than that, depending on the market, are performing a little less than they were last year. And I think it has to do with the fact that the inventory and the competition and the saturation. I mean, competition can vary. We're not just saying like we're adding more units to the market, but the fact that people could be leveling up their game in different markets as well. And so, Tyler, with that being said, let's specifically talk about some of the markets you're in. So, first off, what markets do you, we'll say regions, because there's a lot of markets in the regions you cover, but what regions do you cover?
Yeah.
You feel like you know really well?
So myself personally, my office is based in Asheville, and I also work up in the high country of North Carolina. So from Bryson City to Beach Mountain, those towns are 4 hours away from each other. And because all I do is short-term rental sales for investors, I can cover a much wider area than like a normal real estate agent might specialize in a neighborhood or one town, right? But I specialize in investment sales for the entire Western North Carolina market. And in fact, that's one thing that I like about Western North Carolina is that it is so spread apart. So what I always tell investors, the one thing I like here, I just got off a call with an investor before this live video with you, and she said, what's going to happen with oversaturation? If you've sold 70 of these things in the last 12 months, what's going to happen with oversaturation? I said, well, yes, I'm doing incredibly well. My clients are doing incredibly well. But I might sell 3 or 4 here, 3 or 4 there, and there's nobody else that does what I do in my area, right? So I'm certainly not, I'm a drop in the water compared to what's happening in the overall market, right? But what I like about this market is that there's not just one single anchor attraction. So if you look at somewhere like Gatlinburg, right, Dollywood, or the Great Smoky Mountain National Park there, you've got those anchor attractions, and the closer you are, the more revenue you do, right? It's just like Disney, right? The closer you are, the more revenue you do. It's very simple. And it's not like that in Western North Carolina. And I think it's worth it to take a look at markets, maybe not just mine, but any market that is a little bit spread apart because you have less competition coming in all the time. All your neighbors aren't short-term rentals. The next thing that I like about that is that you have a path to resale outside of the investor. So if you're looking in an area that it's not just a tourist area, there is tourism. You want to make sure there's vacationers, right? If you're buying a vacation rental property, but that it's not just all vacation renters or tourism, that there's some other jobs market, there's some reason for primary home buyers to live there, then you have a path to resale outside of an investor. And historically, the primary home buying market is very, very stable. But I think there's the Airbnb bust. Have you heard that? Mm-hmm. Saying it's like so trending right now. The Airbnb bust right now is like the trending viral thing at the moment. And I do think that that's true for a segment of the market. I think that is potentially going to happen in areas like Gatlinburg that have just exploded in rental inventory. And let's say that area took a 20% hit in revenue for whatever reason, whether it's a recession or whether something else happens, another wildfire. So there's so many ancillary things that could happen, right? Let's say that happens. Well, then there's going to be a run on the market for new listings for sale. And if primary home buyers aren't buying them, investors are running all their data based on revenue, you get a 20% drop in your home values like that. That will never happen in the primary home buying market, right? It's slower, it's over time, it's a lot more safe and a lot more risk mitigation to buying somewhere where you do have a path to resale outside of an investor. I've got a question here from Ryan Barnett. He said, are short-term rentals illegal in Boone, North Carolina? So in North Carolina, our city and town limits are incredibly small around the cities and towns that draw tourists. So Ryan, you're kind of right there. In the town limits of Boone, whole home short-term rentals are banned, but you could get 3-minute drive outside of the town limits, right downtown Boone, and then you're in unincorporated Boone, and there's no more regulation. Very, very simple, very easy.
And the address still says Boone as well. too.
Exactly.
So
Yeah.
yeah, I've seen that
Exactly.
before. That's
Yeah.
really interesting. I do want to preface because we do have quite a few listeners, and I know I'm going to get a message from somebody when you touched on Gatlinburg, so the Smoky Mountains. So people will want to know, like, hey, okay, which I'll just speak to this, and then we'll move on to specifically your markets. But is there a slowdown in the Smoky Mountains in terms of travel and tourism? The answer is no, there's not. People are still traveling there. It's a very great drive-in destination, and it's still growing, and the revenue is growing as well. But remember, where is the revenue really going? Remember that STR wealth divide or the wealth gap or whatever I coined earlier that I already forgot. It's going towards those bigger, more popular properties. And so we need to make sure that our properties stand out and we're looking for unique properties. So with that being said, Tyler, in North Carolina, can you do that? How easy is it to find a type of property that stands out that could be in the 90th percentile for revenue performance?
Yeah, yeah, it's hard. It's definitely hard. And that's why you need someone like me, not to, I'm not stroking my own ego here, tooting my own horn here.
There we go.
The balloon of my head is growing here. But no, honestly, like you want a local partner. You want somebody that's boots on the ground that can make sure, and you want to make sure that that person operates with integrity. So that's what we're doing at Savvy Realty is we're hiring agents across the country, just like Tony Bower, who's in the comments, in the Bourbon Trail of Kentucky, which is an amazing area. If you haven't explored that, you should explore that with Tony. And I think you're having her on in a couple weeks, Kenny, as well. So yes, you can find them, but it's incredibly hard, right? Out of 400 new listings that might hit the market in Western North Carolina, I might truly recommend one or two, right? And so you have to find the needle in the haystack to be able to find a property that could be the best that it could be. Normally, you're not finding that as turnkey. You have to have some sense of creativity. You can't be scared to put the money in up front. It's funny when you were talking about this STR wealth gap. What I was almost thinking is like viral content creation, right? Like what makes somebody go viral on TikTok? Right? What makes somebody go viral on Instagram or YouTube or anything like this is that they're incredibly good at creating content. And I would almost view your short-term rental as social content more than anything else. If you take a photo of it and it has that it factor that everybody will share, everybody wants to go to, that's how you get in the 90th percentile. And only a few people can do that, right? Otherwise, we'd all be famous TikTok stars, right? And we're not. Only Kenny is. So at the end of the day,
I don't know about that.
I think it's really important. You have to make sure, don't just go buy something and throw it on the market with the same furniture that it came with and hope that it's going to rent. It's not. Those days are over and gone. They're 100% over and gone. And so, people will tell me like, how could you feel good about trying to sell investments in a potential recessionary period? And it doesn't matter at the end of the day when you buy it, because people aren't going to stop traveling. Maybe some people will, but overall as a whole, the human race is not going to stop traveling, right? And so if you're in the 90th percentile, you're safe, right? You're safe, but you have to do the work to get there. And it's not easy work, right? You have to design the place right. It costs money to do it right, right? You have to put all the amenities, all the value, all the research. And so I think, yes, an Airbnb bust is coming, but not for us, right? Not for us.
We got a good question, and it was actually my question in the comments. We'll answer that in 1 second though. I do want to touch on or ask. So I've seen this is the grilling part or data.
Here we go.
So let's talk about the high country here. Yeah, I know, right? Get ready. So Banner Elk, Boone, Blowing Rock, and Chimney Rock is
Sugar Mountain.
Sugar Mountain. Yeah, there we go. I've seen in the last 4 to 5 months, I saw Beach Mountain or Banner Elk area with Sugar Mountain sit at about a 14% gross ROI on the average. It's now down to about 8-9% today. So, and I've seen that just across the high country. Western North Carolina, it's gone down just a little bit. It's kind of stabilized, I feel like, in the last couple of months from what I've tracked the trends. So speaking towards the high country, just in general in the whole region, doesn't that mean like it's just not a great market to invest in just because of that data? Like how would you interpret that and then kind of counter that data point?
Yeah, so I think especially when you're talking about something like gross ROI, how do you get to gross ROI, right? What does that mean? And so at the end of the day, that's average purchase price divided by average revenue, right? One, we're not buying average deals anymore. We're trying to get good deals, right? We're trying not to overpay for properties. I'll give you a perfect example. Just this morning, we're recording a $950,000 transaction in Black Mountain that appraised for $1,085,000. Right. So does average sales price or does average list price actually even equate to what the value of the house is? Sometimes it doesn't. That doesn't happen on every deal here. So I'm not trying to make anybody think if they come here, they're going to get rich in equity instantly. That's an anomaly, but it just shows one of the examples of how that number could be skewed a little bit. I think the other thing is that when you look at average sales prices, they've come up significantly. And so again, we're not looking at buying the whole market, and we're not looking at buying average revenue either. Just like you said, Kenny, from 75% on, it drops off significantly, right? But 75% is a majority, right? And so when you look at data points and you have a majority of houses performing worse than they were last year, then yeah, the average is definitely going to go down, right? We're not looking for an average house. We're not looking for an average short-term rental. So I'll give you a perfect example. Right now, if somebody calls me and says they want to invest in Beach Mountain, I'm telling them you must have a view, or you must have something super unique about the house, right? So I've got 2 properties under contract in Beach Mountain right now for buyers, right? One of them is a $1.1 million purchase price, and it is literally at the entrance of the ski resort, totally unable to be recreated. But there's other value to this deal. There's other reasons to invest in real estate other than just revenue sometimes, right? Not every time. This home comes with 5 extra lots, all buildable, all at the entrance of Beach Mountain Ski Resort, right? So this guy could literally go build 1 house a year for the next 5 years and make 200 grand a year on those new builds, selling them off if he wanted to, or keep them, and he's going to lower his cost basis pretty significantly. So there's a million different ways to make money in real estate. To answer your question at a high level, it's deal by deal. Don't buy a bad deal. Make sure you do your research. Grill me if you want to, right? Like make sure that you're working with a realtor that will tell you no, not to buy specific property. Anybody that's in these comments here, Brandon Barber specifically, who's up there, he commented 10, 15 minutes ago. Brandon bought something with me in Blowing Rock, and call him up and ask him if you want. I told him no to 15 deals before that one. And his house is another example of instant equity. I think his was either 50 or 100,000 in instant equity based on the appraisal. Yeah, he's still in the comments. He told me no. Yeah. So make sure you find an agent who's willing to tell you no. I'm not looking out for my next deal, right? My reputation means everything to me. I can't have Kenny's clients calling me saying Tyler screwed me over, he sold me a bad house, right? Because then I'm not here anymore, right? So I think it's deal by deal. Don't worry so much about the averages. At the end of the day, if nothing pans out in a market, don't buy there. Go find somewhere else. Start with the data, especially with a tool like STR Insights and Kenny and his team, and then go find markets out there. I think it's incredibly important nowadays to really, really explore into the markets. Find a niche in a market, just like I found a niche in real estate sales, and you'll be successful anywhere, right? Like you could still be successful, I think, in Gulf Shores. You could still be successful in Gatlinburg. There's some niche that'll work there, right? So don't buy average would be.
I really like that. And it kind of leads into this next question, or like, what are some examples of standout properties? Like, how do you standout properties in North Carolina specifically?
Yeah. So, I mean, this is the easiest thing in the world, right? We're not reinventing the wheel here. Go on Airbnb, find something that catches your eye, and look at the values and amenities and the things that it provides, right? Find the viral and trending cool things that take the lengths of work that others aren't willing to go to, right? So like right now, I've been on this fire pit kick. I've seen this, they build this frame around a fire pit, and then they hang all these swings from it, like 6 sets of swings, and it's really cool. You put some cafe lighting over it. Maybe you get some Philips Hue bulbs and light it up red and green and blue and all these cool colors. If you can start really making your property stand out in those ways, I think that's what's really important nowadays. So it's not easy. Don't reinvent the wheel. Go find them.
I think that's huge. I just throwing this out there. I did a study of Beach Mountain, Banner Elk area. and I found that fire pits on average increased revenue between 10 to 12%. So obviously this isn't across the country. This was Banner Elk specific, but that just goes to show you that having that feature and that add-on can actually bring in revenue as well and help set you apart from everyone else. The reason why what I like about the North Carolina market, Tyler, and from what I've seen in my research, is that what I call the barrier of entry, meaning like what you need to get started out with to compete with the best of the best, is a lot lower than a lot of other markets. Like say the Smoky
No
Mountains.
indoor pools.
Yeah, there's no indoor pools. I always emphasize that one. I mean, you go on Airbnb and you type in the Smoky Mountains, and there are cabins with indoor swimming pools. You're not going to find that anywhere in in Western. That is
to compete there now.
Yep. So, and that's something that adds in that, that really can change, what your returns are.
Yeah.
So,
and I think really, Kenny, what it is like layering those amenities, right? Like you add the fire pit, you go up 12%. You add the hot tub, you go up however much percent, right? You add all the different amenities, you add the arcade games, you max out the space in terms of awesomeness, right? Yeah. Just a really cool place, like somewhere you would like die to go. And I think nowadays people are willing to pay for a premium product. We're seeing this across the entire sphere of the country, right? People are willing to pay for better food, right? People are willing to pay for better travel. They're willing to pay for better cars. They're willing to pay for better houses and better lifestyles. I think that trying to hit that luxury lifestyle market is so important now. And if you can then still make it affordable enough for kind of the average everyday American to come into it, what's gonna happen is you're gonna be in that 90th percentile. And if we do go into a recession, if you're in that 90th percentile and you're doing well, I wouldn't worry so much, because at the end of the day, that 75% of properties that are only doing okay today, they're going to be failing. They're going to be running to the market. They're going to be selling like crazy. And then what happens to inventory? We drop by 25, 50% potentially, right? This is the potential outcome, right? That's what I would want. Like, I would be excited. I kind of want to see a recession happen. I think it should happen. I think there should be a reset. I wouldn't be scared of buying, because at the end of the day, a good deal now is still going to be a good deal later, right? Like, just if purchase prices go down a little bit, that doesn't mean that anybody's having depreciation, but there are still things that you can do to hedge against depreciation. You can buy in a market where there's not a lot of new construction. Ding, 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 Western North Carolina. Not a lot of new construction here. It's all mountains. What are they going to do? Raise the top of the mountains or, cut them down? They're not. There's nowhere left to build, So if you have an area where people always want to move to and they continue to want to invest in, but you don't have any ability for new construction or new supply to the market, then you've got a constricted supply, high demand. And what does that mean is faster appreciation. What does it mean in a recession? Really hard to get it to push into depreciation. Now, if it happens, it happens, and nobody can fight that. But also, at the end of the day, all of you bought in the last 2 years in the craziest seller markets that's ever happened. So if you don't buy in a buyer's market, you're going to really regret it later on. That's how I feel.
I like that. A couple before we hit some of the comments, the questions, and folks who are listening on YouTube or on Facebook, feel free to put your comments in, and we'll answer them as we go. But I guess for what's your projections? We'll say a 6-month outlook on your market or your region, and then a year out. Like, what are you seeing in terms of like revenue growth or decline? And demand and travel 6 months a year?
Yeah, I think it's interesting. All through COVID, my hypothesis was that we were going to pick up a lot of repeat travelers, right? So Blue Ridge, Georgia, they struggled a little bit, I think, in picking up those repeat travelers. And you could kind of see the writing on the wall. So I probably mentioned this to you before, Kenny, but I read an article that said you can see all 9 waterfalls in Blue Ridge, Georgia in one day. And I was like, that's awesome. So what do I do the next day, right? And in Western North Carolina, we have hundreds of waterfalls, hundreds of hiking trails, hundreds of mountains to go to, up to towns 4 hours away from each other that all have unique characteristics and really cool things to do, lots of outdoor activities. So it's obvious now, since we just had the best October we've ever had. And in fact, that bled into November. my short-term rentals were booked weekdays at the beginning of November, which is typically a pretty slow month for us. Normally in November, we get maybe a Thursday, Friday, Saturday, Sunday. I was getting Monday through Thursday bookings. I had 3 of them at one property 2 weeks, before Thanksgiving. That normally doesn't happen. People typically come here in October when the leaves are on the trees, and in November they never are. They're always gone, or they wait until the holidays. So we actually saw some of that bleed over into November, which was really cool. And we had a pretty good November too, compared to what we were even expecting. So in the future, it's interesting. I'm of two minds right now because I went from pretty optimistic to the economy to getting a little bit worried to now feeling like we are actually have the potential for some sort of soft landing. I think I tell this to everybody, like if the measure of a recession is going to be based on something to do with the stock market, then for sure we're going to go into a recession, because in 2020, Apple hit $1 trillion cap, whatever. I'm not a stock guy. It's cap rate or what? It's not a cap rate, but market cap, $1 trillion, right? 2021, they hit 2 trillion. 2022, they hit 3 trillion. It took them 60 years to get to 1, and then 1 to get to 2, and 2 to get to 3. How is that sustainable? That's not real. That's totally overinflated. The whole stock market was totally blown up with all this government money. And to me, it seems reasonable that Apple would fall back down to 1.2 trillion or something like that. It seems totally reasonable. And in fact, I pulled all my cash out of the stock market in February for that exact reason. My mortgage lender called me, told me to do it, so I did it. She's my financial wizard, and it worked for me. I mean, ever since then, it's gone down. So that was a pretty good move. But that's how I feel. I feel like we're going to feel a huge sting in the stock market and much less of a sting in the housing market. There's just so little new construction. There's so much demand. People still want to move. Higher interest rates. We're still seeing, because there's more inventory available on the investment side, we're still seeing the same cash on cash returns that we were able to get in 2021 now, because one, we're not paying $100,000 over ask. So we're evening out between higher interest rates or higher purchase prices. We're even at the end of the day. So today we're still getting the same cash on cash returns that we were last year. There's more inventory available, which means we can find better houses. And that also means that there's a little bit less competition. There was this big cost seg rush in the last 2 or 3 weeks for sure. We lost 11 multiple offer situations in the last 2.5 weeks. Kind of wish I had just gone on vacation instead of getting beat up. But that's what happened in the last few weeks. So we're hoping now that this week, since cost segs it would be very hard to get something in before the end of the year, that it's going to calm back down and we can start getting some deals.
Okay, that's interesting. Okay, so let's talk about a few things. So there's one question by Kumar here. I'm going to paraphrase it, but when it comes to projecting revenue and using free online calculators from multiple or various data providers, what's the best? Are they accurate for North Carolina? Do you feel like they're accurate, or what's the best way to analyze revenue of properties?
Yeah. I find for my market that there's 2 tools that are really good. The first one is going to be STR Insights. You have to go.
You're not biased or anything, right? Go ahead.
On my nose here.
Yeah,
I find that AirDNA revenue is pretty on point. Here's back to what Kenny said earlier, which is 75% of the properties are slowing down, right? Because there's more and more and more inventory, and there are more top properties that are doing well, and they're attracting all those people. So the 90th, 85th percentile is doing better. 75th percentile and down is doing worse. So what does that mean? It means don't look at averages. Go look at individual properties. Go look at individual comps. Find something that compares to your vision for your place, right? Because it's probably not going to be totally turnkey, right? It's not going to be amazing without some vision. So with your vision in it, and then go find comps for that, right?
Yep.
So like if you put in an address around Asheville, for instance, the city limits of Asheville are banned for whole home short-term rentals. So at the end of the day, if your property's north, south, east, or west outside of city limits, it doesn't matter, because there's not a reason for a traveler or tourist to go to one versus the other. But if you go just in AirDNA and put the address, it's only going to pull the 8 closest comps. But that doesn't really matter. What you want to look for is the top 90th percentile of properties all over the surrounding limits of Asheville. Now, I'm not saying don't find things that compare well, right? You don't want to compare something that's 5 minutes away to something that's 30 minutes away. But if you can find and comp with properties that really have the same values and amenities that your vision is for your subject property, then that's what you really want to look for. Don't do yourself a disservice by running the wrong revenue, right? At the end of the day, if some calculator shows it's going to do 60,000 a year, like go deeper than that, verify it, right? Like if your property has views and all the surrounding properties don't, and that's all the AirDNA comps, then why are you going to comp with those? Go find something that does have views, that does relate well, because maybe that property is a huge winner, right? Like maybe that can do 180,000 versus the shitty properties around it that are doing 60,000, right? And so for me, we dig really, really deep before we say yes or no to something. And I'm not saying this to fluff people up or to get them to ignore the data. No, I'm saying dig deeper into the data.
Yep.
Dig further. Like don't just accept the first answer up front, just like you wouldn't accept the first answer up front, like this property is going to do $200,000 a year, but the data doesn't show that. Why would you also take it if it says it's going to do $40,000 a year? Right? Like, don't just take it for face value. Dig deeper, find a real estate partner with integrity, like me, Tony, or Aaron March in Myrtle Beach, and really like pick it apart, pick the deal apart, and you can do that pretty quick nowadays. You know, I wouldn't wait on something that's a good deal, because if you're looking at it, somebody else is looking at it too.
Yeah, I agree with that. I think it's important. Like, so going back to the whole like these calculators. You hit the nail on the head there. Like you have to find comparable properties, which requires some manual work. So in STR Insights, here's my shameless plug, but in STR, I mean, this is why I designed this. Like we designed this tool this way is you can literally filter and see where are the 90th percentile properties, 75th percentile and 50th. We have 60, 85th as well, but like all the different ones, you can find where those properties are, click into them, see how much revenue they're making, and click into their links as well to see if they match the type of property you're looking at. In my opinion, that's better, especially in mountain markets, than just looking at a random radius around that property. Because if you have views, you're going to make a lot more than the property that might be right next door that's at the bottom of the hill. And so we have to really be careful and mindful of that. And like you said, tear it apart. And then on top of that as well, you do need to call someone and have someone boots on the ground who knows that area. I'm a data guy through and through, but when it comes down to it, if I'm going to, risk $500,000, $1 million, you better bet your boxers I'm going to be calling a realtor and like, hey, I think this works, but what do you think? Because it could be, in a ghetto, it could be somewhere like sketchy or not. No one's going to travel there. So the data could say one thing, but you do need to talk to a professional as well. But look at other properties. That's the big key, is looking at the right and finding the right comps. Which I think Melanie asked this question about how do you know what percentile your property's in. I don't know about other data tools. I can't speak to them specifically, but you can probably do that in STR Insights. And so Melanie, if you're not sure, please just schedule a demo with us for free. We'll look at your property and we'll figure out what percentile it's in. And it could be on our percentile map as well. So we can take a look at that. Amanda okay, this is interesting. So she's saying that she had I don't know if you're reading this comment, but
I am, yeah.
If she made a bad purchase in June in Gatlinburg, bought way too high in the wrong market, less equity now, the mortgage revenue is bad, great view, unique architecture, no fire pit. Don't know what she's going to do. She's kind of in a bind. So Tyler, from your experience as a short-term rental host and owner, what would you do in this particular case? And then I'll give my opinion too, because I also own short-term rentals. So go ahead, Tyler.
So, for me, I would say like if it's not going to financially destroy you today, I would get out before it does. Like if it's close to financially destroying you, but it wouldn't today. I don't know. There, people call me the Gatlinburg hater. I got called the Gatlinburg and the Blue Ridge hater the other day on Facebook. Sometimes I think I am. And, maybe I don't know enough. I'm waiting for somebody to bring me the data that says I'm wrong, but nobody so far is. I don't know. I know Alex Sabio was at the beginning of this, and he seems to be building like 5 $1.5 million cabins every time I talk to him in Gatlinburg. So he must be doing something right.
I'll say this. There are strengths and weaknesses to each market. And Tennessee, especially Gatlinburg area, the Smoky Mountains, has amazing tax benefits. But if you're not investing in a market to leverage those tax benefits, then you're not going to get the cash on cash return that you would expect on the other side of the Smokies in North Carolina. So where the cash on cash and these other KPIs that were mentioned are significantly better. But there are advantages to being in the Smokies versus and vice versa. You just need to understand what they are. So, sorry, go ahead.
Yeah. I might, before you make a financial move, I might tear your listing apart. Anything and everything you could possibly do, any amenity, I would go through every single comp in your neighborhood, look at everything, find people that their calendars are booked out, see what they have, and add every amenity you possibly can. Do everything you can. Like, get more 5-star reviews, reduce the prices, do better promotions. You know what I mean? Anything and everything you could possibly do. Use every trick of the trade before you go out and lose money. But at the end of the day, I would figure it out fast, because if you're holding an asset that's just depreciating and has negative cash flow every month, it's a double whammy. And unfortunately, it's going to be hard to solve either of those problems in a long term. There might be things you could do in the short term, like adding amenities or redoing photos or anything to make your listing better or stand out better. But if those things don't work out, I would try to liquidate as quickly as possible.
Yeah, I'll just say, Amanda, if you could reach out to me, it looks like you're on YouTube, but you can email me or just our STR Insights or support at strinsights.com. Send me your listing link. I'll take a look at it. But my gut reaction is, are you doing any marketing? Are you doing anything to promote outside of the OTAs, Airbnb and Vrbo? Or are you only on one? I don't know. Are you using RankBreeze to see where you rank on the SEO of those pages? There's a lot of little things that you can do, like as of today, to understand what could put you in a better position. One of my listings, it dropped. I was tracking it, and it dropped all the way down to page 2, and wow, it's a 3-bedroom property, and I was getting no bookings, and I'm like, this is unusual for now. And so I saw that, and I immediately, boom, moved my photos around, changed my title, bumped me back up in the SEO of the OTAs, and I got a booking the next day. I'm not going to say that's going to happen to you, but we have to be tracking and monitoring these things. And then there could be slight tweaks that we can do. And like I said, I don't know what your tech stack is or what you're currently using and trying. So, this could be all like you're like, I already did that, but would love to know that. So share that with me, and I can try to help you out as much as possible.
Yeah, and I'll leave a little tip here that I saw in one of our masterminds. I think it was yesterday or something, from one of my clients. She has got RankBreeze, so a lot of people have been talking about this. Their rankings really dropping in the last 2 weeks, and I don't know if that's actually true or not. Maybe it's just a RankBreeze thing. But what she did was she dropped her cleaning fee from $200 to $175, and she shot back up in the rankings. And it was like in one day. And what is that? That's not very much. If it costs you $25 a booking at the end of the month, like, that's not very much to be able to shoot back up in the rankings. So there's a million little different things you could try. Try them all. I mean, I hate to hear that you're losing money. I'd be happy to help too, but Kenny's probably better for it anyways. So but any of us, us, Bill Faith, post in the groups, like, this is such a helpful community, and that's one thing I love so much about being in the short-term rental community. And you find that most of those hosts out there that are willing to be super helpful are the ones that are in the 90th percentile. So take their help. It's free typically, unless you hire Bill.
Yeah, I'll add this too, guys. So there's a lot of questions about like revenue and KPIs and metrics and like comparing revenue between different areas. Tyler, I'll let you speak, but I'm going to put a promo code for you guys to STR Insights if you do want to check us out. If not, schedule a demo with us as well. I'm going to throw that up while Tyler's talking about sorry.
Starting over.
I accidentally hit that. Yeah, starting over. Here you go. So there you go. Just at the bottom. So Tyler, what's the revenue comparison between Asheville area and the high country? So
yeah,
Boone, all that, the ski areas.
So here's what I tell everyone, right? Based on what we were talking about earlier, it's not so much dependent on one town versus another. It's deal to deal, right? Like if we're looking for a 90th percentile property, at the end of the day, it doesn't really matter where that is. So it could be in Asheville today, it could be in Beach Mountain tomorrow. It really depends on the deal, right? Like this one that I've got under contract in Beach Mountain that's at the entrance of the ski resort. That's a super good deal because there's just incredible things that he can do with that property. And it's the closest you can get to the ski resort, right? Total ultra modern, $500,000 renovation in that place. Really, really cool property. But at the end of the day, like that deal will be gone tomorrow. So then we have to go find something else like that, something with unique characteristics. So in terms of like what to look for, here's what you should do. Book a call with me. It's calendly.com/Tyler Coon. Calendly.com/savvy-realty. We changed it up a little bit. You can book with me. You can also book for Myrtle Beach. You can book for the Bourbon Trail of Kentucky with Tony Bower out there, and do an intro call with us. What we do every day is we handpick properties that might make good short-term rentals. We email them out to everybody. Kenny's on my list and he gets them all the time. And then give me a call. Let me know if you're interested in something. We'll underwrite the deal from beginning to end. At the end of that, Savvy-Realty, REA.
Realty. Okay, I gotcha.
Savvy
right.
Realty. So that's what I would do. Give us a call. It's Tyler@savvy.realty. You got reality in there, but
oh, sorry. Yeah, no, my bad.
You got to have these things prepared in advance, man.
I know. I should have. Well, I had your number and all that good to go, but you're like Calendly, so I'm like trying to put it all in. But
yeah, you can put my number up there too. I don't mind, guys. Shoot me a text. We'll set up a time to talk. This is what I do all day, every day. I love
what's your number, Tyler?
It's 828-620-2541. And anytime, shoot me a text message. That's probably the easiest way. If you give me a call and I'm not available, it'll roll over to my assistant. And literally anything you guys need. If you just have questions, if you're at the beginning of the journey, if you've got a ton of short-term rentals, or you're a first-time investor, no matter what purchase price you're at. We closed something for $250,000 last month, right? Like we're not looking just for $1 million properties here. I love to help first-time investors, in fact, because I love when they come back to me for the second one and it's $500,000, and then the third one is $750,000, and I get to watch them create wealth out of thin air. For me, that's such a cool journey to be on. It's just as cool as selling $1 million or $2 million property for me, where I make more commission because I get to feel good about it at the end of the day, that I was at least a part of the process.
Yeah, no, that's awesome. Someone asked, is everyone who bought this year in trouble on average?
I mean, it seems super pessimistic, and no, I mean, every deal I've bought this year so far is doing better than I thought it would, to be honest. Like I said, maybe Mr. Right. Box of Plastic came on more near the end of it, but it's in the numbers, guys. I'm not making this up. October, at least for Western North Carolina, I don't do the data for all the other markets, so rely on Kenny for that. But at least in Western North Carolina, the most revenue, the highest occupancy, the most number of nights booked, the most properties booked, every single metric was up. Not only was it up, but revenue was up 30% year over year compared to last October. So when you have all these people out here saying 2021 was the best year ever, you can't compare to 2021's numbers. It's not true for every property, for every market. Some people are going to do better. Some people are going to do worse. If you've left your property the same since 2019, probably no, you probably are doing worse, because now it's stale and everyone that's traveled to that market has seen it already. And so make updates. There are things you can do. This is not a passive business anymore, right? This is not passive income anymore. And I don't like when people say that, because it makes people think they can come in and not do any work on their properties or their marketing. And you have to nowadays to survive.
All right, cool. Well, Tyler, I really appreciate you hopping on here. I think we're going to wrap up here.
Yeah. Good to talk to you, man.
Yeah, it's always a pleasure to speak with you and to just discuss like what, it's interesting. I feel like I talk to you maybe once a quarter about North Carolina. And it's interesting on kind of how it's grown, the state of the market in terms of short-term rentals and where it's headed. And it's just kind of I always get like that warm, good, fuzzy feeling of North Carolina when I'm looking at the data, and also, speaking to you as a professional who knows that market as well, because I love what you touched on, and I've seen it too with the data, is there are areas that you can definitely afford that cheaper property, that's going to still have the really good returns as that $1 million property, over by the ski resort. And so that's why I really like it. It's a very dynamic market in terms of, where you look and what you can afford. So those are always good. But Tyler, any last remarks or anything like that?
Now, I would really say, just to reiterate again, I'm not telling everybody that every house in the Western North Carolina market is going to be a gold mine, right? Literally, we're looking at 1% of new listings. That might make it. That might make it. We might actually only go under contract on a fraction of that even, right? And it's because we're specifically looking for the properties that can perform at the very highest levels. And so, honestly, market to market, like I think you could still buy in Gatlinburg. I think you could still buy in Blue Ridge and in Gulf Shores and in Destin, in that whole 30A market. If you have a niche or you're set apart from the rest of the market in some way, if you can be a 90th percentile.
It's about the probability. So if you have the chances of you finding that property, especially a turnkey property that's generic, because we're mainly speaking to the masses here, people who aren't, interior designers, people who are just, we have some other W-2 job and we know that this is, or, maybe we've turned this into our thing, but we're not like that person who can come up with a niche. We're not that creative. So when we speak to the masses, it's about the probability and your chances of finding that really good return in those markets that everybody's already run to and invested and gobbled up all the good deals.
Yeah.
So I think that's important to say. Like, it's not that you can't find them in those markets. It's just extremely difficult. And so here are some markets that you have better chances of finding the good properties that have a really good growth runway as well in terms of demand and tourism growth. So
awesome. Yeah.
All right. Well, thanks everybody for attending. And if you have any questions for Tyler or myself, feel free to reach out. But especially Tyler, you're interested in North Carolina, there's Tyler's number. Give him a shout. So, so thanks, Tyler. Really appreciate you being on here and sharing your nuggets with us. So.
Of course, yeah. Anytime, happy to share my nuggets with you.
All right. Thanks, everybody.
Thanks, Kenny. Thanks, guys. Bye.